by liking, sharing, and subscribing to the channel. Okay, so let's get right to it. So basically, what do I mean by keyzone? The simplest definition that I can give of a keyzone is we'll be talking necessarily about the previous swings, that is previous turning points, right? So let's check the market. This is USD on a daily time frame. I'm going to start here on top and up until here. So we are taking this particular downtrend, right? This particular downtrend, and please follow with me, right? And then afterwards we'll take this uptrend. So we have got a downtrend, and let me just show you the downtrend. Let me just put a trend just so that you can see clearly which trend am I talking about. So we are going to talk about this trend, this downtrend, and yes, it's this downtrend. And then afterwards, when we are done, we will look at this uptrend, that is this side, from here going up. Right, we'll look at this uptrend. Okay, at this uptrend. So basically, the direction of how the uptrend here moves is heavily influenced by how this downtrend moved. The major turning points of this downtrend will influence and impact where this uptrend will then turn. The same thing if you are to go back into the past, you'll notice that this uptrend, because before this downtrend there was this uptrend, right? The turning points of this uptrend affected how this downtrend moved. So as we are dealing with that, we'll be looking at key zones, right? That is dynamic turning points. And I want you to know that when you're dealing with dynamic turning points of the market, that is the swings, you can use any chart whatsoever that you need. But I heavily recommend that you use at least the daily time frame. Because the higher the time frame, the better. For this, what I'm showing you, use at least the daily time frame. I personally get my major key zones from the monthly and weekly time frame, but this daily time frame is what assists you then to it's like the icing to the cake. All right, so let's see how this downtrend affected this one. Once we know how this downtrend affected this uptrend, we'll also know how the incoming, because the market is reversing, how the incoming downtrend that will begin here to go down will be affected by what? By this uptrend. So we'll know when to sell, when to close, when to take profit, right? Okay, so look at this. What do I mean by swing points? I mean major what? Turning points. So this downtrend began here up, right? Up there, came down here, right? And then went up again, and then went down there, right? And then went up again here, then went where? Down there. And then went up there, then went down there. And then went again up there, and then went down there. And then went up again, and then went down there, and then formed a what? Change of character here to tell us that I'm now changing what? Direction. All right, so concentrate on these points, on these turning points that I just drew. Let me try to see if I can thicken this drawing. Yes. So I want you to concentrate mainly on these turning points. This turning point, 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 these turning points, right, that make this a downtrend. These are our immediate, what we call our immediate key level zones for the next trend. Okay, so the same thing that we are going to do for this one is the same thing we're going to do here to be able to identify exactly where the market will react here in the next upcoming trend that is within the upcoming month. All right, so let's just I'm going to be putting straight lines, right? I'm going to be putting straight lines, horizontal lines, wheresoever there is a 10. Okay, so we have the 10 here, right? Let's begin here. See, then let me thicken my line. And we're the 10 where again? We're the 10 here, right? With another 10 where again? With another 10 here, right? With another 10 where again? With another 10 here. And from there with another 10 here, right? So this 10 is also accommodated by this one and this 10. So it's one and the same. And then from there with another 10 way here, right? And then you see this 10, right? And then went up, then came back down, breaking this last 10, which means we've got this other 10 here. So do not neglect it simply because they are close to one another, right? So yes. Why did I neglect these ones? Is because it's almost one in the same area, right? So yeah. But you can actually put a line there if you want to. And then from there, last 10 there. So I want you to notice something, right? So my chart looks a bit messy now, but I hope you won't get lost. You are working with me, right? So in every 10, every line here, every straight line, horizontal line that I just drew represents a 10. What it means is this, that the major turning zones of the next uptrend after this change of character are going to happen at one of these lines. So which means that every time you see price retracing back to either of these lines, you have to make sure you are ready to buy. Are we together? So look at this. Okay, let's start with this bottom. Nothing happened, right? Nothing came. Look at this 10, first 10, right? Second 10. Market came, touched this line from the previous 10. And then remember what did I say? When it touches a 10, get ready to what? To buy. And then from here, it went up. You see? So imagine if you call this trade here. And I'm going to release a video. I don't want this video to be too long, but I'm going to release a video on Candlestick language. How you can then use Candlestick confirmations to confirm your direction. Like if it came here, the candlestick that is here, pattern that is here, is supposed to tell you that I'm going up. You see, so personally, if for example, if I was here and waited for these daily candlesticks to close, this pattern here, let me just try to see if I can zoom in. This pattern, where are we? Aha, there we are, right? This pattern here is called an engulfing bullish. Engulfing bullish pattern, it means that the market is telling you that I'm going up. So what I was going to do here, I was going to put my entry somewhere here. It's more to do with Candlestick language and how to know how to enter using Candlestick. I'll explain more, particularly on its own video, right? So we have a turning point here, right? And then the market went what? Up, respected the turning point. Where's our next line after that? Our next line after that is here, right? See this line? And look, the market broke this line, went up, came back, retested the line. And after retesting, it gave us a candlestick pattern signal, which means that if you had missed here, this entry, you're going to enter here, because this is what we call a bullish tweezer. It's the market's way of telling you that I am going up, right? Then it went up, up, up. Then it broke this what line again from our previous what turning point. Then it went up and then came down, touched it, and didn't break past it. And then after doing so again, it gave us another entry signal. This is called it's a bullish pin bar. It's a bullish pin bar, this candle, right? And this is a bullish morning star. So all these are the market's way of telling you that I'm going up, right? So if you understand the candlestick language, you would be understanding every time the market communicates to you like this. You'll be understanding and you'll be making money. And then afterwards, it went up, broke this line, and look at this again, as if same thing, came back, retested it, gave us a entry signal. You see? And then after that, went up, 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 broke. And then went down, down. Look now. If you are now here saying, okay, so it will break the line and then come back, retest again before it goes up. Here, are you seeing that we don't have a signal? That is, the market is not telling us that I'm going upward. That's why we don't have any candlestick confirmation pattern. But here and here, 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 we have candlestick confirmation patterns. You see, so there was no way you were going to enter here because you don't have confirmation pattern as yet. And then market went down, came here, gave us a confirmation pattern, touched this line, giving us a confirmation pattern. This is it's a bullish engulfing pattern. Then from there, it went up, touched this area, went down again, touched this area again, failed to break it, and went up. You see, so you'd have caught this trade from here, and you just be trailing stop loss, trailing stop loss, trailing stop loss, up until you are now somewhere here. Are you seeing? And now we are here. Where are we now? We are at the next what possible zone where the market will either come down again to touch this area, or it will go up to touch that area. So we do not know what the market will do now, but we have to look at the language of the candlesticks. What are the candlesticks telling us here for us to know exactly what it will do? If the market is coming down here, like it did here, right? It did here. This is a daily time frame, right? You will notice that in the lower time frames, like the 1 hour, we'll have a change of character here, change of character here. For those who don't know the change of character, you can go watch my video on order blocks and why they're so important. But I'll make a video also only on change of characters. You see, so we have change of character. So the market will be telling you that I'm not going up there, I'm now going down. So all these moves, if you understand how the market talks, you would know from here to there, to coming down, you'll be hearing the market telling you. It's like the market is your friend, telling you that, okay, I'm going up, I'm going down. It just takes knowledge to understand the language. It's just, for example, if I am to go to Japan today, or I'm to go to China today, I don't know Chinese, I don't know Japanese. So somebody can just tell me that, okay, Mishek, you have got money right behind you. There's 1 million. And I may not even pick it up. I may not know it. Why? Because I'm not hearing the language. But if I'm to learn the language, then I'll pick it up and become a millionaire in a short space of time. The same with Forex. Like I've been showing you here how the market spoke to us, the direction up until there, which means you could have caught this trade. And from here up until there only, you can have made more than $1 million, right? So yeah, depending obviously with your lot size and with your account size. So I would have wanted to give you another chart to show you how this is applicable in every chart. But because I don't want this video to be long, let me just give you a challenge, right? Look for a different chart, maybe Euro USD, GBP USD, or any chart of your choice, and try to do this that I was telling you. Remember, the previous trend in a day, and make sure it's a daily time frame, right? The previous trend, these turning points of the previous trend will make up the possible entry points of the next what? Trend, just as we have seen here, right? Which means if this market is going to come down now, these areas that we are with, the turning points of this trend line, are going to be the entry opportunities for the next downtrend that may form now. If the market pulls up and goes up, we just go into the past, and check what happened in the past. So don't. So it looks like there's nothing here, but actually there is something, because you go back into the past, back, you discover that there'll be something. Just that maybe I think for this particular laptop, I'm not really able to go that back into the past, right? So yes, so please do it on your own chart and let me know, right? And if you have got anything that you want me to talk about, please comment on the comment section. Thank you so much for watching up until the end. Wishing you the best in your trading and wishing you to become so successful as a trader.